Hey everybody, this is Randy Simnoff with Keller Williams Action Realty, and today I'm joined with David Stroud from Fairway Independent Mortgage, and we are going to talk about private mortgage insurance, PMI, if you will. So I am not the expert here. So David, I'm going to turn it over to you and talk about PMI a little bit. What can you tell us?
Perfect, thanks. Yeah, so PMI, or private mortgage insurance, is a fee that you have to pay anytime you put less than 20% down when you purchase a home on a conventional or an FHA loan. Now, if you're purchasing a home with a USDA loan or a VA loan, then there is no private mortgage insurance you have to pay. But whenever you put less than 20% down, you have to pay this private mortgage insurance fee until you have a point to where there's 20% equity in the property. One thing that's really neat about that, though, is that it kind of sets it up in tiers or stages. So if you put the minimum payment of, let's say, 3% down on a conventional loan, your private mortgage insurance is going to be a little higher than if you put 5% down or 10 or 15% down. But it goes in those stages: 3%, 3.5%, 5%, 10, 15. And then, of course, when you get to 20, there's none. And so if you have those stages, then the percentage is paid down. When you purchase a home with the FHA loan, it's the same regardless of how much you put down. Conventional changes, it fluctuates based on how much you put down. But when you purchase with an FHA loan, you're also going to have to pay an upfront fee that goes along with that regular private mortgage insurance fee you pay each month. Whereas with a conventional loan, there's not. So there's no upfront fee with a conventional loan, but there is with the FHA. And so that's where there's a lot of different variables that take into consideration determining what is the best loan program for you based on credit score, the amount of money you have for a down payment, if you're using some sort of down payment assistance program. And so there's just a few things to kind of take into consideration and think about as you're looking to purchase a home. So that's PMI in a nutshell. What's great too about this, though, is that when you get to the point with a conventional loan, there is no upfront fee. But also, once you reach the point where you have 20% ownership or equity in the property, private mortgage insurance is supposed to drop off naturally. With an FHA loan, it's there for life unless you refinance and get out of it. So those are just a few things. If you guys want to know more, I'd be happy to help. It's David Stroud with Fairway Mortgage. Thanks, Randy.
Great information, David. Thanks so much.